Hi everybody, and welcome to my new video podcast. This is going to look at the research I've been doing over the last weekend on the stock market using the closing prices from Friday, and also having a preview on what's coming up this week. And first, the news. The news is from the official news desk of the US government. And there are lots of other pieces of news that come out, but these are the most important. These are the ones that could affect the market and that look at the economy going forward. On Tuesday, we got the Consumer Confidence Index. That's important, obviously, for retail, but behind that, manufacturing and everybody else. On Wednesday, we have the preliminary GDP, the gross domestic product. How much has the economy of the US grown by or shrunk by? The last announcement saw growth quarter on quarter of 3.3%. Obviously good news, the economy is growing. Thursday, we see the core consumer inflation month on month, and last month, inflation had increased by 0.2%. Now, that's not overall inflation, it's consumer inflation, the inflation that people meet every day in their lives. Also on Thursday, we get the unemployment claims, and previously there had been an increase of 201,000 people putting in claims for unemployment benefits. So let's see what happens this time. And Friday, we have two more figures regarding the general economy. The first is the Institute of Supply Management Manufacturing. That's the Purchasing Managers Index. Are they looking to buy more raw materials or less? Previously, it was more, and it's an index. It actually increased by 49.1. Then finally, on Friday, we get the revised Michigan State University Consumer Sentiment Index, and that's another one that's an index, and we're looking at previously it was 79.6. So let's see what happens this month. And a couple of items of company news. Probably everybody heard of Nvidia this last week with their 16% share price increase. That's based on their involvement with artificial intelligence. The size of that company is huge and it's growing like I don't know what. It reminds me of Tesla and also Apple. Brilliant first mover advantage, and in the long term, it may begin to slow down a bit. That'll be when the likes of Microsoft catch up. I have a personal favorite in this area, which is our Cisco, CSCO. They're spending $13 billion on our research of artificial intelligence. But one that you might not have heard of is a company called Gtherm. THRM is their ticker symbol. They make auto parts, particularly for air conditioning systems, and also equipment used in the medical field for keeping patients cool. Their shares went up this week by 20%, even though their earnings were only, I think it was about 6 cents higher than expected. And we're looking at earnings of around 56 cents per share. Not in the same league as Nvidia, but surely a money spinner if you're in there. And one other piece of news, and that is that Amazon has now joined the Dow. It's replaced Walgreen Boots. This week saw the publication of 3 new quarterly reports on companies from Value Line. The first was for Forward Air Corporation, ticker symbol FWRD. The timeliness score there went from 3 to 4. Now, the best score for timeliness is 1 and the worst is 5. So that was a negative movement. And to quote from the report, venturesome investors willing to buy and hold ought to keep an eye on this depressed stock. That doesn't mean to say rush into it. Also, BlackBerry came out and it said it could be an alluring turnaround potential stock, but not for the faint-hearted. And then Dino, HF Sinclair, ticker symbol DINO. The timeliness score for this petroleum company has jumped from 3 to 1. It's moved from being ranked to keep pace with the market to beating it. So that is one to keep an eye on. And here's the new index that I've put out for the markets. So I went back to the 31st of March 2020 and called that 100. The significance of that date is that it was for stocks the lowest point that they got to during the pandemic lockdown. And they did hit real lows. So let's have a look. Going from the bottom up, the Dow has gone up 81% since that date, and it went up 2% last week compared to where it was on the 31st of March 2020. The Nasdaq has gone up by more. It's gone up by 108%, but only rose by 1% last week. And the S&P 500, that's gone up 97%, and last week it was 2.13. But the winner is the TICN 4x4 stocks. That's all the stocks that are listed on the TICN website as having been at or currently are at the 4x4 scoring. They've gone up by 132%, and last week went up by 4.15%. I also looked at the biggest riser and faller of the TICN index. The biggest was SMCI, the super microcomputer company, and it's had the biggest gain. It went from $21.78 to $860.01. That's a gain of $838 or 3,848%. And I can tell you that most of that increase took place in the last quarter of 2023 and the first quarter of 2024. The biggest loser is CAMP. They've fallen during the period from $103.50 to just $3.18, a loss of $100.32 or 96.93%. Now, I should add that CAMP has been as low as this previously and has recovered. So we might not write it off altogether, but it's something that we're not looking at present. And these are the stocks that I'm going to be looking at closer this week. Alibaba, PayPal, Comcast, and Ring Central. The VL timeliness score is exactly that. The score given to them for timeliness out of 5 by value line. And again, remember that 1 is good, 5 is bad. I've then got the quality scores and the value scores from TICN. And basically, I'm not interested. If a score is below, certainly 35, then it's not getting on my watch list. But in this case, everything is okay. And now I've got a new timing score. This takes into account the timeliness score that you're seeing here, plus the charts for the quarterly, monthly, and daily periods. And I combine those to get a score like quality and value out of 52. And here are the scores that I've come up with. 42, 41, 38, and 38. I simply then total them. I've put the closing price from Friday in just so that you can see if it might rule it out for you. For example, I'm not interested now in stocks that are currently over $100. That's because the percentages that we tend to get for premiums on puts, for example, is low. And then I put in a comment which just reflects what I'm reading on the value line reports, particularly compared to the previous reports for these. And they were all positive. And then I put the earnings dates in. And the earnings dates are there so that if they're fairly imminent, you might want to hold back and look at these stocks on or after the date of their earnings publication. So looking at them one at a time, first we've got Alibaba, and you can see the quarterly report well down on price, the monthly report down on price and showing signs in the indicators of being ready to rise. And on the daily, not actually that brilliant if you look just at the prices themselves, but if you look at the indicators, then they're rising and they look good to continue rising. Now you can also see a new chart, which I put together, which is proximity. On this, the upper of the two lines is the S&P 500 index. Again, going back to March 2020. And there's been a steep rise in it this month. Below that, you can see what's happened to the price index of Alibaba since the same date. I would really prefer to see these two are converging. That would be a good thing. At the moment, though, the S&P has jumped up so quickly, so much, that I think it will take most stocks a little bit of time to catch up. And here is PayPal. PayPal, again, quarterly, down there, looking ready to turn, not quite there. On the monthly scale, we have got upward indicators, which again is pretty good. And on the daily, again, rising indicators. And in proximity terms, the price index has just lifted slightly there. Again, a very good sign. And the next one is Comcast. Comcast, the price looks high on the quarterly figures, but the indicators are certainly rising. And on the monthly, again, they're not low, but they're rising. And on the daily, again, it looks reasonable. Not perfect, but looking reasonable. And on the proximity, again, we have a bit of a lift on Comcast. So again, that's a good thing. And Ring Central. This actually generally looks better. The quarterly indicators are rising, the monthly a little bit flat, but certainly the right side of the line, and the daily figures quite low, ready to go again. Ring Central's got a long way to go to catch up to the S&P 500, and hopefully we're beginning to see it getting ready to do that. Now, as well as looking at stocks that may go up, we spend far too long in stocks that fall. In fact, if you look at all of the TICN stocks, I can tell you of the 162 that are listed, there are 30 that have not recovered to the price they were at the 31st of March 2020. So somewhere along the line, we definitely should have come out of those stocks. So this week, I've got stocks that are rated by Value Line as 4 or 5 for timeliness, and where the indicators and charts are not looking so good. In fact, they've got a timeliness scores, I've actually worked it out, of 20 or less. FOXF, MXL, NEM, SWN, BB, ESE, SAGE, SCCO, WBD, and LQK. There are more stocks that I don't like over and above these, but these are the ones that I like least. Now, this could take people an incredible amount of work to get to, but I seem to have nailed it. What I've got here are two lists. Those that have had their Value Line timeliness score increased over the last week, and those that have had those scores decreased. So some of them have, perhaps like AU, only gone from 5 to 4, not brilliant. Others have moved into the very good 1 or 2 category. PAA actually jumped up 2 scores. It went from 3 to 1. But we also have the list on the right of stocks that have come down in their scores. So MXL and SSRM are newly scoring 5. No surprise with SSRM following the news last week that they had a major mining disaster in Turkey and have lost their license to operate there. And Turkey is a big part of their operation. Now, earnings can drive prices, news and earnings. So I've listed here the earnings that are due to be published over the next 2 weeks, this week and next week. Now, these don't always come to pass. Quite often the dates get moved, so they may not actually happen on the date shown. This is just simply the latest estimate. What I don't do is anticipate these other than by saying I'm going to stand clear until the actual result is published. But some of them, they could, for example, miss their earnings just by a few cents and be perfectly good in every other respect and still get punished for that loss of a few cents on their earnings. That can create a good opportunity to get in. And that's what I'm looking for with these. Just to remind you about our live training, that's at the Sofitel Terminal 5, Heathrow, London. We're there on the Friday the 8th from 5 until 9. That's mainly going to be about live trading. You'll see some of the tricks and tips that we use. Saturday is all about scoring stocks for value and quality. Really, really important stuff. And for buy and hold investing, fantastic. Sunday, I'm a main part of the agenda myself, and I'm going off into the research that I'm doing and constantly updating. There's always something new and exciting on the Sunday. Now, you can book just for the Friday or for the Saturday or for the Sunday or any combination. And if you want to come and join us, then go to myinvestmentclub.co.uk, and on the front page, you'll see a button there for the Heathrow event. And I should warn you, there are very few places left. If you want to do it, jump in and get it done now. And if you haven't read my book, let me just remind you about that. It did get to Amazon #1 bestseller in the UK in several categories. But it's available now as an audiobook, as well as if you like, a paperback, a proper book, and also as an ebook. And it's actually very, very inexpensive. Get onto Audible, get onto Amazon, and get hold of it if you haven't read it. There's a wealth of information in there about how we trade and how we find great stocks. Thank you for listening. That's Jeff Fitzpatrick. I'll talk to you next week.